Most people think money is just cash in your wallet or numbers in your bank account. But here's the shocking truth. The money you use every single day, your dollars, euros, pounds, yen, isn't really controlled by governments. It is controlled by central banks. And once you understand how central banks work, you will realize why they quietly run the entire global economy. Why your job, your savings, your mortgage, your retirement, all of it is influenced by the decisions of just a handful of powerful institutions. So let's dive into the truth. Why central banks control the world's money, and why it matters to you. Let's start with the basics. A central bank is the financial backbone of a country. It's not like your local bank on the corner. Central banks don't take deposits, they don't hand out credit cards, and they don't compete for customers. Their job is much bigger. They create and control the supply of money itself. In the United States, that's the Federal Reserve. In Europe, it's the European Central Bank. In the UK, it's the Bank of England. In Japan, it's the Bank of Japan. Almost every country in the world has one. Now here's what most people don't realize. When you imagine governments printing money, you probably picture politicians in charge. But in reality, governments do not control money directly. Central banks do. They decide how much money exists, how much credit flows, and what interest rates you pay. That's an enormous amount of power. Let's take a simple example. If a central bank wants to stimulate the economy, it can lower interest rates. That makes borrowing cheaper. Suddenly, businesses can take loans to expand. Consumers can buy houses and cars more easily. Stock markets rise because money is flowing. It feels like growth. But if inflation gets out of control, central banks do the opposite. They raise interest rates. That makes borrowing expensive, slows down spending, and cools the economy. It feels painful, but it's their way of controlling the system. In short, central banks act like the thermostat of the global economy. Too hot? They cool it down. Too cold? They turn up the heat. And that thermostat affects every single one of us. But here's where it gets deeper. Central banks don't just control national economies, they shape the entire global financial system. Think about the United States. Dollars. It's the world's reserve currency. That means it is used for international trade, oil, gold, technology, and debt. And who controls the supply of dollars? The Federal Reserve. When the Fed raises interest rates, the entire world feels it. Currencies in other countries fall. Borrowing costs rise in developing nations. Global stock markets react instantly. The ripple effect is enormous. In other words, one central bank in Washington, D.C. can trigger financial earthquakes across the globe. Now, you might be wondering, how did central banks get so powerful? It wasn't always this way. Back in history, money was tied to gold and silver. Governments couldn't just create money out of thin air. It had to be backed by something physical. But in 1971, everything changed. President Richard Nixon ended the gold standard for the United States. Dollars. From that moment on, money was no longer tied to gold. It became fiat currency, money backed only by trust in the government and the central bank. This gave central banks nearly unlimited control over money creation. And once that happened, debt exploded. Because if money is no longer tied to gold, central banks can create as much as they want. They do this through a process called monetary policy. By buying government bonds, injecting liquidity, and lowering interest rates, they pump trillions into the economy. That's why you've seen massive bailouts during crises like 2008 or 2020. Central banks literally conjured money out of nothing to stabilize markets. But here's the catch. Every time central banks create more money, they dilute the value of the money already in your pocket. That's why inflation happens. Your grocery bill goes up. Your rent increases. Your paycheck doesn't stretch as far. Because the money supply keeps expanding. And yet, despite this, people still trust central banks. Why? Because without them, the entire system could collapse. They are the lenders of last resort, the only institutions that can prevent a total meltdown when panic sets in. Let's talk about crises. When stock markets crash, when banks fail, when recessions hit, who steps in? Not Congress. Not presidents. It's always central banks. They slash interest rates, buy assets, and flood the system with cash. They're the firefighters of the financial world. But here's the paradox. they're also the arsonists. Because the same easy money policies that save the system also create bubbles. Real estate bubbles, stock bubbles, debt bubbles. And when those pop, central banks step in again. It's a cycle that never ends. Boom, bust, bailout. All managed by the people controlling the money supply. And this control doesn't stop at borders. The International Monetary Fund, IMF, and the Bank for International Settlements, BIS, act like global central banks. They coordinate policies, lend money to struggling nations, and influence economic rules worldwide. This means a small group of bankers and policymakers, unelected and often behind closed doors, can decide the financial fate of billions of people. Some call this stability. Others call it control. Either way, it shows just how much central banks dominate the world's money. Now, let's break down why this matters to you personally. If central banks raise interest rates, your mortgage gets more expensive. Your credit card rates go up. Your investments may drop in value. If central banks print too much money, your savings lose purchasing power. The retirement you planned for may not cover your expenses. Every financial decision you make is tied to their actions, even if you never think about it. And here's the scary part. Technology is giving central banks even more power. We're entering the age of central bank digital currencies, CBDCs. This is money that doesn't exist in cash form at all. It is purely digital, issued and tracked by central banks directly. On the surface, it sounds convenient. Faster payments, no need for physical cash, more efficient systems. But think about the implications. With digital money, central banks could track every transaction. They could decide how and where you spend your money. They could even impose negative interest rates, literally shrinking your balance if you don't spend it. This would give them unprecedented control over individual lives. Not just economies, not just markets, but you, your money, your freedom to spend it. So when people say central banks control the world's money, they're not exaggerating. They set the rules of the game. They determine how much money exists, how much it is worth, and who gets access to it. But here's the good news. Once you understand how central banks work, you can protect yourself. You can diversify your money. You can invest in assets that hold value over time, like stocks, real estate, or even gold. You can avoid being fully dependent on fiat money that loses value with every policy shift. Knowledge is power. And in a world where central banks control the money, knowing the rules is the first step to financial freedom. So remember this. Every time you swipe your card, every time you take out a loan, every time you watch the stock market rise or fall, behind it all, there's a central bank pulling the strings. And until you understand their power, you will never fully understand your money. If you found this video eye-opening, hit the like button. Subscribe for more deep dives into money, investing, and economics. And let me know in the comments, do you think central banks are saving the world or controlling it? Because either way, one thing is clear. Central banks don't just influence money. They are money.